Everybody, welcome back to the channel. The stock market went absolutely crazy today. In today's video, we're going to discuss whether this little rally that we experienced is going to continue within the next few days. I'm also going to be sharing with y'all some stocks that you should be watching, all right, and along with some updates on several stocks. Now, before we begin, do not forget to annihilate the like button on your way in here, right? So let's get right into it. So we got the SPY over here, and as y'all can see, a massive move from Monday stretching into today, and then wait, actually no, this is Tuesday, or this is Monday. This is Tuesday, yeah, Tuesday stretching into Wednesday today. All right, now will this move continue higher? I personally think that it can, and I'm going to explain this thing on from this perspective. So first and foremost, the SPY. We're gonna look at the Nasdaq like right after this. But the SPY at first was looking bearish. We were bearish throughout the whole of last week, right? Throughout all of last week, and I even like draw that little game plan for y'all. And if you look at this perspective, right? A lot of bears, even I was anticipating a sell-off going from Monday into Tuesday. It actually started at exactly like at midnight, and then at 4 a.m. this turned into a trap overnight. So this right there was kind of like, it's disappointing for the shorts to see. It looks like a bear trap because it is a bear trap. Now into the open on Tuesday, it didn't collapse. It got right back into the triangle and just kept consolidating, and kind of set it up for this massive squeeze that we experienced today. Is this thing going to continue? If it opens higher, I think it will. I think the next level to see here would be exactly 4,500 by Monday, I think, because this trap and all of the shorts who are caught in here are contributing to the massive push. Now, if we're gonna look at the Nasdaq and look how that game plan turned out. So this is the Nasdaq, and it was doing really well until Tuesday. So Monday we had a drop, right? But then Tuesday it couldn't quite get to 12,571. So what I'm thinking about the Nasdaq is that we go retest that upper line at 14,222, and then maybe even go a little bit higher towards 14.5 before the market starts to chill out. So that's my honest thoughts on the overall market. The reaction to the rate hikes turned out to be positive, and so far this bearish trend is no more. All right, right now we're just taking it day by day, and just again trade what's in the front of you. Trade what's in the front of you. Right now, the first stock that y'all should be keeping in your watch list, that stock is Twitter. All right, now Twitter. The reason why I want to share this one with y'all is for a very simple reason. Number one is massively undervalued, right? It's been selling off for quite some time since the highs of $80, and right now it's at $35. And next, if we look closely, first there is that morning star right here. Let me make it really big. All right, this right there, the red followed by this inverted hammer followed by this. This is a morning star, and if you go onto the 4 hour, and then we look from over here, you can see that there is, let me just get that out the way because it's in the way. There is a bullish pennant that actually broke out on Tuesday. Well, it was about to break out on Tuesday and then kept running today. All right, it kept running, and right now it looks like it wants to go all the way up to $38 at least, because there is these individuals right there. There are these individuals who I'm sure would like a second chance to get out of that trade. So if there is a pop, which I think there will be, they're going to use that to like get out, and then there will be a sell-off following that move. All right, so watch Twitter for a move all the way up towards like $40. $39 at first. All right, if it stays clean. So that's pretty much what I'm seeing for the stock. Now, again, since we had this massive rally, I don't want to be too overly bullish and show y'all a bunch of bullish setups. So this is one for the bulls. Now I'm gonna share with y'all one for the bears. The one for the bears, that one is AMR, a bubble. All right. Now this one is a classic bubble. It went quite vertical very quickly, as you can see right here. A tremendous year for the stock, but right now it's just looking weak. We were looking at it since last week, and I told some people to short it, and some people definitely did. I told them to short it on Friday, right there, especially after that hanging man pattern on the chart. And for those of y'all who have no clue what the hanging man pattern is, let me show you. There it is. There it is. All right, so this was the 11th right here. All right, so this is the pattern, and this is usually what the outcome is. All right, so a lot of money to be made on here, but it's not over yet. It's ready for round 2. And the other reason why I say that is because if you go into the, let's go into the 5-minute. There we go. Yeah, if you go into the 5-minute, you can clearly see that there is a bearish pennant on here, right? This right on here is very clean. And the stock itself is not even moving with the overall market. So regardless of what happens, whether it's bullish or bearish, this one, gravity is still going to take its toll on the stock. So definitely watch this one for a potential drop. It might take one day. It might take 2 days. Like it might take tomorrow and Friday to get really low. Probably towards around $87 at first. Now, if there is some terrible news with the company, like let's say like they do a price offering or a secondary offering, like some stock dilution stuff, I think it's going to drop even further. Like we have seen this before, and yeah, that's why I want to share this one with to you guys so that y'all can keep it on your watch list. One for the bulls and one for the bears. All right, now let's do some updates. I've talked about, somebody actually asked about Qualcomm. Now, Qualcomm was one that I've mentioned for a long time. Like I mentioned this one a long time ago for the drop all the way down to for this gap fill down here, as you see, at $138. Now, it took a sweet time to get there. It was quite annoying, right? Very annoying. It just kept chopping down here, and then it showed a falling 3 method. And then on Monday, it eventually collapsed. And then the gap did not, like, it looked like it got filled, but in order for it to be fully filled, the stock has to get down to like 137 and then bounce. So it looks good for now. Like there is a pin bar at the bottom. The combination of this candle right there with this green one, and also like the hammer that goes right below, where the wick goes right below the previous red candle. This is called a pin bar. All right, and the follow through is bullish, and there should be another green candle following that, at least for maybe half of the day. And then what happens on Friday, I don't know, but this is setting up for a bounce. Again, eventually that gap is gonna get fully filled. Eventually. So short term there may be some more momentum up, but maybe the week that follows after the 18th may be a little shaky. All right, so just be very careful, and again, keep your eyes on, trade what's in the front of you. That's what I'm going to say. Don't make any assumptions, and don't try to do too much either, right? When the market gets choppy, it's good to just focus on like 1 or 2 clean plays at a time. All right, it will help you go a very long way. Now, the next one that we're going to talk about in today's video, and the last one, is SOFI. All right, now SOFI was a stock that I've talked about before. I told y'all, I think it was like, I told y'all 2 weeks ago when it was up here at $10 to watch it for a drop to, I said probably $6, but definitely $8. We got to $8. It went to 7.45. Is this thing done yet? Is this thing good for a reversal to the upside? For the long-term investors out there who are looking to get in slowly, it's not gonna go down too much farther. Like again, $6 is still on the table. Like it's still there. Like the week after the 18th, we could see it. So just keep that in mind. But it's at a good price right now, 7.74. Like right now, it's at $8.50. Not a bad place to start dollar cost averaging in if you have done your homework in that company and you believe in its long-term trajectory. All right. So that's my honest thoughts on all of these stocks, and that is the end of the video. Again, do not forget to annihilate the like button for the YouTube algorithm. As always, helps the channel a lot and allows more people to get this knowledge as well. Also, if you are new to the channel and you haven't done so already, definitely click on subscribe and click on the notification bell along with all notifications. That way you don't miss out on future uploads. If you would like to be part of a private Discord community where you can get all of this information in real time, you can find that as the first link in the description of the video below. If you haven't added me on social media yet, you can find me at Ngumah and at PATTERNOLOGY LAB on Instagram and on Twitter. And lastly, if all of this is brand new to you, if you're interested in getting started in the stock market, I left some very basic step-by-step directions in the description of the video below. Step 1 to step 3. It only takes about 15 minutes or less for you to get set up with all the tools you need to start trading immediately. You can also get 2 free stocks valued up to $1,850 right after signing up with Webull using the third link in the description of the video below. Once again, ladies and gentlemen, my name is Ngumah with PATTERNOLOGY LAB, where we trade patterns and patterns only. And I will see all of you in the next video.